Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 Eastern Standard Time. And beginning tomorrow, this stream will be about 1 hour here in YouTube, and then it'll be continuing live in the Bookmap Discord Trader Lab for those of you who are registered and have verified your email. And it's important that if you want to see this stream in real time, that will be continuing exclusively for Bookmap Discord Trader Lab participants. And if you're interested in that, if you haven't verified your Discord username, there's a link in the bottom of YouTube. You can visit the Bookmap Discord Trader Lab, and that also will give you access to 60 PDFs of structured trades that I review here in the stream. Library of webinars and statistics, and of course the Trader Lab community. All of this is available at no cost. So you have an invitation for that, and I certainly would like to see you there. Let's take care of business. We have a very active day today, and I would say a little bit weird, but in the nature of things I always talk about here in the stream are elements of market mechanics. So what this stream is about is how the market works, why it does what it does, and how you might get in alignment with it at times. And the other aspect of this stream and the Trader Lab, not only is it a community of like-minded traders who have come together to leverage their collective experience, this is about understanding the business side of trading. The business of trading is very much like gaming. So gaming is very much, consider it like in a casino, really. They only play games that are anchored. In other words, they don't change the games. They don't have variable inputs. That's the anchoring. So example, blackjack is always played the same way. Doesn't matter. The cards coming out of the deck are random, and the gambits play the cards randomly. And I always like to repeat this, so we come back to what the basis of this business really is. Our nature, because of our wiring, is to look for certainty and to be able to predict things and to be right. There is no right. There only is statistical edge. That is what creates potentially right. And then actually, once you extract an edge, then executing it. So what we do here in Trader Lab is we use some tools. We use auction market theory. That's understanding how the market works, why it does what it does, how at times you might get in alignment with it. It's overlaid on the volume profile. Consider that a chassis of distribution of behavior by the participants. And then the tip of the spear, as I like to refer to it, is Bookmap, which is a high-tier order flow tool which helps us see inside participant behavior. When you put those three pieces together, it might give you the tools in order to potentially generate an edge over other traders who don't understand how the market works or how to use a high-tier order flow tool, which may, at times, like everything, give you an edge. There is no black and white mechanical trading. Most of us are looking for red light, green light. I get it. You get it. The problem, of course, with that is if that worked, then retail traders have all walked in our shoes, would still be in the business, and most of them are not. I think we can all learn from that. The thing is, if you understand behavior and you have an education that you're getting through your experience, are you going to keep repeating the class, or can you extract something from that experience and then extrapolate that and say, well, what is going on? Why am I coming back always to the same place? And I created something called Trader Groundhog Day, and I did it for myself because I kept waking up in the same place looking for a different outcome when I had certain beliefs that were not in alignment. And again, this is just me, okay? But I've been doing this going on 45 years, and that doesn't mean I have all the answers. I'm still trying to get better, and I will until they carry me out of here. But I will say that over time, I spent too much time trying to fix defective processes because everybody, no matter what they do, even if they have absolutely no edge, has winning trades. And when we have a winning trade, our belief is that we're on the right track and we just have to make it better. Anyway, that's what Trader Groundhog Day is about, because you keep waking up in the same place. And I did a webinar on it, and it's available to all of you at no cost, again, in the Bookmap Discord Trader Lab community. And the link is in the bottom of YouTube, and there is no cost. If you want to visit the Trader Lab, you just have to verify your Discord. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss. Something's beeping. Hold on. Well, I don't know what it is. Nice. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. If we get into real time, like I always do, if it presents itself, I will do live narration. But I do not call trades because I take stops. You take stops. You don't need me to help you take a stop. So there is no holy grail. There is no secret sauce. It just doesn't exist. Part of trading is risk management and doing like the casinos do. The gamblers get paid in the casinos. That is cost of production and overhead. It's not a personal failure. The job of a trader, just like the job of a dealer in the casino, is to just deal the cards exactly the same way, play the hands, and the outcome of each hand is random because they're in an uncertain environment. They don't control the cards or the gamblers' play. We don't control the other participants' play. What we control is what we do. And the idea in the Trader Lab is to help you build a plan with structured, vetted trades. And your job is to just sit and wait for your trade. It's like waiting for a bus. So we are opening lower inside of yesterday's range. Low of the day is below us. And of course, you remember the high of the day was way out there someplace. So it's quite a bit north. So I want to give you a couple ideas here. So lower in range, couple statistics. Past performance not necessarily indicative of future results. You got to vet and verify everything for yourself. What's going on here? This is the ETH volume point of control. This is the highest volume price in the ETH. The yesterday's highest volume price in the RTH was there. So this is the settlement. So we opened lower inside of yesterday's range, and there's yesterday's low. Now, a couple of fun facts to know and tell. Approximately, and you got to vet these for yourself, these statistics are in the Trader Lab, about a 70%-ish probability we'll get there. Huh? Really? There's to get to yesterday's low, high or low. Now, this is what has me fixated on going for yesterday's low at some point. Let me find it. To take out either yesterday's high or low is an 85% probability. Now, I don't know about you, but taking out yesterday's high, not high on my list, okay? So my inclination was responsive buying. In other words, shorts that are in the market get squeezed. In fact, write this down. And I always say this, and I always think this is too simplistic. But guys, it is not about complexity. It's about understanding market mechanics. The market goes up to go down. The market goes down to go up. What did it do yesterday? Down. What did it do this morning? Up. Why? When there's shorts in the market and the market doesn't continue, what are they going to do? What would you do? Wouldn't you cover? Well, you'll get new buying. You'll get short covering. Buy stops get triggered. They become buyers and more buyers come in. Lovely. And then we anticipate that. So early on, our trades, if it presents itself with structured trades, are longs. If it happens. And it doesn't mean we can't take a short and then or whatever. It doesn't matter. What matters is the plan is in place before the fact. Now, my plan for today, and I'm not saying it turned out so good today, because I definitely was fading the market more aggressively than I probably should have. And it ended up where it went further than my plan suggested. But that doesn't matter. What matters is I'm currently sitting short now. That doesn't matter either, because this trade, like the rest of them, anything can happen. And that's not a recommendation. but I posted in the Trader Lab my plan. Now, my plan is not the best, and it changes. Nothing is rigid in trading. I can anticipate, but I cannot predict. My job is not to predict. Now, there is an 82, let me make sure I got the right stat, to test the ETH volume point of control. 83% probability. This is the retail price. So if I open and I check this, and I can go straight down here, right? No way to know. But if I open and test this and then I get buying structured trades, then I have to get long, because then I'm looking at that responsive buying. So I'm going to start with that. And remember, we have a 70% probability of getting to that naked volume point of control. Now, when I come in the morning, I'm not expecting, and I'm using the word expect because there is no expectation. There's only maybe. Write that down. Maybe. Maybe it'll do this. Maybe it'll do that. And how do you operate in uncertainty? Structured trades that you have vetted. And the outcome of every trade is random. There is no prediction. Now, you may want to predict. You may need to predict. But that is psychology. That is your wiring to avoid pain. You know, the saber-toothed tiger in the bushes. We don't want to get chewed up. So this is my retail price from the ETH. And I have about that 82-ish% probability. You have to vet those, right? So I know I can come here and I can go, just go right down. So I'm looking to see, should I get short for continuation, or will I get the squeeze? That's what I know. And often it's buying for the reasons I already stated. So let's look. I checked the overnight volume point of control. This is this is 1 second in. This is the RTH open. So this yellow line is showing me more volume as we're going down. This is showing me delta, and these are aggressors. Delta is an aggressor. An aggressor is represented by new sellers and by sell stops. Okay, so now you know what delta is. So when we see delta, we are anticipating aggression, continuation. Now, in order flow, if the behavior changes, I see the sellers, but they don't keep going, that will tell me something. Now, the fact is, like everything, we're not going to know this until hindsight, when we observe a change in behavior. So I'm here and I'm thinking, okay, this looks like a short. I cross above. What does that tell me right here? Right here, now I don't know until I cross above this yellow line. I call this the retail price. Why is it retail? Highest volume. What time is it? I'm into 2 seconds. This is not where developing traders should participate at all. Let's watch the behavior. This is called VPOC migration. I'm going to label this. Now, again, these are all available in the webinars that are in the library. In these structured trades, there's 60 PDFs, and you can see these things over and over, and they're documented very nicely. Plus, in the Trader Lab, many traders have documented these. And the idea is, when you're developing as a trader, you need to learn behavior. So this was absorption. So how do I know it was absorbed? Because there's an active participant, aggressor, and there's a passive participant, which is represented in the limit order book. Order flow shows us the aggressors, and with the stop and iceberg detector, I can also see, is there iceberg, is there absorption? But the limit order book, that will not show up in here. So these sellers can be selling, and buyers can be on the other side of this, but they're not market orders. If they're passive, if they're limit orders, we don't see them. We only see the behavior. What this is telling us is there were buyers absorbing these sellers. That's what it's telling us. So now when I cross over here, and I label this, I call it a variable high volume node, this might, underline, be saying this is too low. And notice where it is. It's in alignment here. So right there, I'm going, and that's exactly what I'm doing. I'm going, because I don't know. So this is VPOC migration. Right here, because it's equal with this, it is neutral for me. Though I am anticipating, remember, I'm equal here and here. And I tested underneath. There was absorption. This is the story. And now I'm looking potentially for a long, but I don't have it yet. I'm on the edge. Let's watch. Break, pullback, test. Right here, it sets my long up. And I want to show you this. This is very advanced, not in the concept. It's advanced in the speed. 10 seconds. We come up. This is micro, high vol. Let me show you two. This is minutia. This is microstructure. Now, I can't do anything with this because, again, it's going to be in hindsight. I get two stops coming out. I see microstructure here. I see my seller. I got no buyers there, and I see rejection. So this now is micro high volume. That high volume structure, this is a micro consolidation. Inside of this is volume. I'm just going to put it on here so you can see it. And now what was down here? Too low. Where's my structured trade? It's against here. I dip. I come above. This is a long. So this is a long in the Trader Lab. This is a long right in here in the Trader Lab. This is a long in the Trader Lab. This is the micro high volume structure. Break high, pull back, and test. Long in the Trader Lab. Microstructure. Where do I come back? Back to the high volume. Long in the Trader Lab. These are structured trades. And this is all part of the structure. This is another structure here. So I got this. I got this. These are all longs. Now, these are aggressive, not for the faint of heart and not for somebody who hasn't done their work and develop unconscious competence. It's really fast. So, too low, new retail price. VWAP, mid. This is now retail. This is too low. This is too low. I got to label this. Got to keep up with the yellow brick road. I call this following the yellow brick road. The yellow bricks are the developing volume point of control. So what am I anticipating? Responsive buying. So I got my buying. Okay, the shorts are in here, the fuel's above me, and now I'm going to get new longs, and I'm getting a short squeeze. And the thing, of course, part of the joy is where to. Too low. Here, potentially too high. Rotate. VPOC migration. What do you see going on here? Longs, long. Where do I hold? Here, long. These are all structured trades in Trader Lab. So you long. So we had longs this morning in the Trader Lab. Now, VPOC migration. This is suggesting continuation. Now, let's watch. Is everybody tracking, by the way? These are structured trades in Trader Lab. Now, VPOC migration, right here. I got to label these, and I'm showing you process and narration. Now, the joy of trading is, I like to use the term clueless. And I always like to say I'm clueless, and I am, because I am not rigid. I must stay flexible. So I'm in the longs, and I'm going, well, I'm looking to get short somewhere. Now, the problem with getting short anywhere is where. So right here, I'm looking at this, and I have my high volume right up here, high volume structure there. So I'm looking at this, and I'm saying, well, where's my targets up here? I have ETH high, has a high probability. By the way, the ETH low is here. So I know I have over a 90% probability of taking out either the first ETH high or low, and also over 90% probability to take out either the first hour's high or low, which is called the initial balance. So statistically, I've got some stuff to work towards. This is my next target here. And then this is another target up here. So I'm working statistics. So this here is a target. This is the next target. So I was done with it here, okay? Because, I only have so many bullets. So once I'm out, however, we have another structured trade in the Trader Lab. Now, is everybody with me on the longs? Any questions on the long side of this thing? Let me get going here. I've got some other stuff. I am sitting in a short now. Teeth are chattering. Hope you're getting something out of this, guys. Please give a thumb up if you're visiting in YouTube. Also, remember, if you want to visit the Trader Lab, there's no cost. This is open to everybody. All you need to do is click the link in the bottom of YouTube, and that'll give you access to all the resources in the Bookmap server. Not only the Trader Lab, you can download 60 PDFs of these structured trades so you can reverse engineer them. Also, statistics, why going for this target and this, and the structured trades. And then you have to vet them. The thing about trading, guys, is it's not a predictive business. It's a maybe business. Maybe. So 70% probability to get there. And I think we have over a 90% probability to take out either the ETH high and low. And we're going to have a high probability of taking out the first hour's high or low. That's 97% probability. Anyway, so right here, I see no questions. I'm going to go into the first short. Now, before I do, I got to put something up on the screen. And this is, please verify your subscription. Starting tomorrow, this stream will be taking place. Part of it will be live exclusively for Bookmap Discord Trader Lab participants. You need to register for this. So if you're a Bookmap subscriber, you need to verify so you can access the stream and the resources. If you want to visit the Trader Lab and you have a Discord, you need to be registered with Discord. You need to confirm your email. There's a verify link in there. And also, just as a side note, you can get a free subscription to Bookmap, the digital version, so you can play with it. And that'll give you full access to all the education in Bookmap that requires a subscription. There's no cost for a digital subscription, just saying. So let's get back to the party. Any questions, please post them. And remember, these streams are available exclusively to Bookmap Trader Lab participants to reverse engineer, review, screenshot, circles, arrows. If this is the retail price from yesterday, and it was our target, and it is potentially too high, when we test it with a 70% probability, we have the following possibilities. This is the current retail price in the developing RTH. This is yesterday's retail price. Retail means highest volume. Think of going to the store, and when you shop, where buyers and sellers agree to do business, that creates high volume. So retail. Well, the other part of the auction is what might be too high. Well, we can come back to the store and check, and if it's too high, we can return to here. So for me, this is a structured trade to short. And remember, my objective was to get long, squeeze out the shorts, and then look for a short to come back and take out the low of the day. So now I am working the shorts, and very excited about that. So let's take the short. Let's look at the short. Now, I have a location. This is what's important. I'm not making this up. Sometimes it feels like I'm making it up because things don't work. But that's emotional. When I say feel, I want you to listen to the language. I feel. What is that? Nothing. It's my wiring. It's not my job. The dealers don't have any feelings. Probably just when is my lunch break. Right? So let's look at this. This is where the micro volume is in this structure. I'm going to draw a little box around this. And this is what I do mentally, but for you guys to see it, what is this? What is this? Now, this could go out here too. It doesn't matter. What I want to show you is the rotation and the location. So I test, I see a sweep. Let me pull this down a little bit. I'm going to show you the trigger. And now I have my out here. So too low, too high, too low. Now what's going on here? Buyers are up here. I see my selling icebergs. What do we know about buyers? Going to the moon, Alice. Location, absorption, here, stop. This is a sweep. So the book gets swept. And then where's my buyers? Above. They're not. Now, even if I come above it and break below it, it's the same structured trade, and you have to vet that. My sellers take over here. My volume is here, right there. And my consolidation, high to low, is here. I break out of the consolidation. The sellers are now taking control. These buyers are trapped. These guys are under the bus potentially. And now the potential is to come back and check the retail price in this structure. This is all called trading in fractals. This is retail in the developing time frame. It's the highest volume. In this fractal, in a little microstructure, that little volume there is the same thing. Think Russian dolls, Matryoshka dolls. This is a doll inside of the bigger doll, inside of yesterday's doll. That's kind of how I think of them. And then when you look at this, this is also the consolidation. And in the middle of this consolidation is the volume is there. So I have high volume here, which is going to create this. And in the microstructure up here, shorter time frame, it's right there. Does that make sense? This is called fractals. Think Matryoshka dolls. They're dolls inside of dolls inside of dolls. Short. Stop is here. Target is here. I took this one. Got scaled. Now I'm going, I got you now. And I'm looking for it to come across. Because in the auction, remember, target, potentially yesterday's price. If it's too high, see you later, come across. So that was my trade. And this is a high volume trade or retail to retail, Russian doll. And then what else do I know? We have VWAP in mid, and I'm looking for it to get under here and take out the longs. That's the trade. And I get taken out of it. So I'm out of this trade. And so I got scaled and I got taken out. So I leave my stop at entry here because in theory, we need to get under here. If I don't get under there, then as we say, there might be a problem. So yeah, there's a problem. So got taken out of it. Now I'm going, what? Then we get our report. And I'm going, what? Right there, I got very perplexed. Notice where we come back. So right here, and this was very confusing for me, but I have a structured trade here back to the volume. So I come back to my naked volume point of control, same thing. I rip everybody out, and I'm very dubious about this trade because we took the stops out. But I got to follow my plan. I see buyers here, and I see my sellers back at my location. I get VPOC migration. Now, this is a conundrum right here. I put this short on here, and my stop is up here. And I'm thinking, oh, this is not a good trade. I mean, I'm thinking that, you know. So where am I going to try to go? I want to come back to the VWAP in the mid and then hold the trade. And get my scale. I get taken out again. I'm starting to have an emotional response to this, which means frustration, and I can feel it. I journal these things, by the way, and I've been doing this for years because I now know what is going to happen. And when I feel it, it's because of dopamine, it's because of frustration, it's anger, then you're thinking revenge, and you're not conscious of this. This is part of the primal wiring. So when this happens, this is like two trades I got taken out on. I'm getting a burger basket, that kind of thing, hold the fries. And then again, I'm going, well, these trades are correct for me. What is going on? Why are these buyers so persistent? Of course, I don't know the answer, except they are. So, okay. So this is okay. The other one was okay. Now I'm in the perplex mode because I'm now above this. So, and I have this setting up. This is the first hour's high, and it sets at 9:30 Central Time, and there's over 90% probability we're going to take this thing out. And I'm going, oh, son of a gun, among other things. So now I have to look up the financial food chain here and goes, where's my targets? Here's my next significant target. 68.25. And I'm surprised because, and I don't like the word expect, but this was really my primary target coming up. Then I have this area up here, and and that just kind of threw me off. So I'm off. I'm going, now what's going on? So I have this. Now I have other trades here. If I come across this and then come back in, it sets up a short back to here. If I break across here and hold this, it can set up a long. So I have two trades in here. Now I notice the buyers are doing a heck of a job. So I'm rather dubious about what's going on here. Just telling you, it's like it can go either way from here. So let's look at the behavior. This is a short. Remember, this was a short from earlier, and now I take it out. This is high volume. That is high volume. I shorted it on the way up, going down. I'm now broke and I'm above it from here. What might that suggest? Let's just see what happens. So this is the first hour's high. I break above it, and I'm thinking, well, can I get under this again? Because now I'm looking for a short, and I'm looking for it. Now, the problem is my VPOC is migrating up, and that is a problem for me. So I'm thinking short, but I have conflict right here, because this is moving. And what I would like it to be for the trade, is for it to be further down. So this is support. This is support. So right here is a potential long through here if it's in your plan or nothing. So let's watch. Right here, this is called range extension. And I'm above this. And look what else I'm above. I came above this location. This is suggesting higher. So I have to try to take the longs. So this is called the IB continuation trade. Here's the volume. Here's the test. This sets up a long. And I'm going for this. So for me, I take the long, I get a scale, and then I just trade the targets. I don't know. I'm trading here. Now this right here, I see this and I see the change in behavior. I have my micro high volume here, and I didn't get here. Right here, I see the sellers. I see the absorption over here. I see my icebergs, big icebergs going off. And I see a cluster of icebergs come in over here looking to get short, and they're selling. I ended up getting out. I'm going to tell you where I got my short, 55. I got short right at 59.75. So I'm short from here, and I'm still holding that trade. So wherever. And this was my target. 85% probability we take out either yesterday's high or low, remember? So I'm just sitting here, and I've got my scale, and that's my last trade. I'm just holding that trade. So this This is the same as that at a higher time frame. We don't have to get there. I just target these things and I manage my trade. I have no clue. That's why this would have been a target. That's why this was a short. Well, this sets up the same thing, but we just didn't quite get there. We got into a low volume area from yesterday. I can't show you all these pieces, but this is a confluence of location. But so when I'm coming up here, I'm looking at micro high volume. Watch, look right here. Let me show you how you might think about this. I narrate this in microstructure. So I like, for example, this is microstructure. It's chop, 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 chop. It's a consolidation. I break high, too low. I chop, chop here. I break high. That's too low. Come up here, chop, chop, break high. That's too low. I chop, chop, chop here. Break low. That's too high. Change in behavior. Then we pull back. Actually, for me, when I saw this and the break, and I'll forget, I have this. This comes from, where does this come from? Just see. Right here. Let me get this back. Hold on. So right here, what I saw here, what this is absorption. I recognize the absorption. And I recognize, you see the buyers, they're absorbed. Now, where's my buyers? I have buyers sitting there. Where's my volume? I've got nothing going off here. Right here, if you look at there's a little bit of buying there, and now the sellers take over. That's why I got short. And I'm willing to take a stop. Why? I'm a trader. I take stops all the time. Doesn't thrill me, but it's overhead and cost of production. I am emotionally, I respond emotionally to disappointment and all those other things we emotionally feel. When you journal, you should be writing down, I felt this. I got stopped out. I felt that. And then I jumped right back in again. That's revenge. I got to get it back. That has nothing to do with our business. So anyway, I'm still short. So the scale is back here. It's mean reversion, and then hold to get these longs out and to take advantage of that 85% probability that we're going to take this out. And there's a target below too. We can get down here. This is a target. You can make a note of these, not recommendations. This is in the gap. We got a bit into the gap yesterday. There's still more gappage below us, and you're going to have stops from the longs under today's low, the IB low, and under here. So I'm going for this because of 85%, and it's not a trade recommendation. Questions, guys? This is a Trader Lab, and sometimes it's pretty, sometimes not so much. It's just trading. Please give a thumb up if you're visiting in YouTube. It does help. If you have questions, please post them. So now I just sit with this trade, and we have a trader in the Trader Lab named Rod. He puts a trade on, and he'll go to the gym, take a nap. So I can't speak for him directly, but he kind of says, he posts in the Trader Lab chat. And, Trader Lab is a community of traders. And so you understand it takes as they say, a village to do the work to be able to operate. One person cannot do this. It's very hard, and it's a lonely business. You really need to be in a community so you can share your experiences. If my wife, if I start talking about trading, or actually anybody else who doesn't do this, their eyes gloss over and they think they landed on a different planet. You have to be in this business to understand it. And most of us come into the business with a fantasy of what trading is, and it's really very different than what we imagine it to be. Think about what you thought trading was. Is it a video game? Is it just a compilation of indicators? Red light, green light, indicators and time frames, and now you have an ATM in the basement. Isn't that the illusion? The fantasy, I should say. Well, for me, I don't know. You come into this, and especially now, you guys go out on the interweb there, and there's so much debris. And I mean, it's unbelievable. I don't know how you ever sort it out because you can run out of time and dollars long before you actually figure this business out and find what works for you. There's not one way to trade. I have to tell you, I know a lot of traders over the years, and they all kind of carve out their little piece. I will say that they don't do what most retail traders do. I certainly don't do what retail traders do. The reason is I've done what they've done. And over years, and unfortunately it took me years, process of elimination, I kept removing things. It was very hard to do because you could spend a lot of time and invest yourself into a process that is absolutely no edge. But because of the random nature of trading, you get winning trades anyway. So you think it's just making it better. That's what caught me for many years, actually, because, I'd get into like days like yesterday and have a phenomenal day. You could throw a dart at a board yesterday. Today, it requires a whole different process and a different plan because it's not yesterday. So what a lot of us do in trading is we isolate a day like yesterday and I know many traders in Trader Lab had a phenomenal days yesterday because we already know what we're going to do if it shows up. And the other part of it is when it changes, the behavior of the market changes, we have to adjust to it. We don't predict anything. Remember, I'm going for down here. And then, whatever. And I have all day, right? So no hurry. I'm just looking. I only got one left at this point, but it's doing very nicely. This is what Trader Lab is, guys. So if you're looking for action, like be a scalper, that's all very much dopamine oriented. You can develop a skill for that. I was a high volume trader many years ago. Many years ago, in the NQ, 100 trades a day, that kind of thing. Um, I will not do that again. I had a partner that my broker was my partner, and he did really good. I would do well, he would do well. I had a bad day, he'd still have a good day. So you do that for a while, and at some point, because of the stress and the cognitive focus that's required to trade that with that frequency, as the day goes on, you have fatigue and you're subject to more errors. The more documentation you keep about yourself, one thing about trading, in the outside world, we get opinions of ourselves. There's structure in the outside world, socialization. Even there's a red light. Hopefully you stop for a red light. There's things that we do, and they help us succeed because we fit into norms. In this business, it is not the same. We have to get into an area of complete discomfort because of uncertainty. We crave certainty. We crave, that's our need. And we're successful adhering to principles that work, that we were socialized in our education, our parents, all these certain things. Don't put your hand in the fire, you're going to get burnt. Well, don't take a trade because you're going to get burnt. You're going to take a stop. You're going to have pain. Don't put a trade on because you took a stop on the last trade. You're going to get burnt again. Does that sound like you? Guess what? It was me. Because I didn't understand that I had to separate, that each moment in the market was unique. And I had to treat it that way. The dealers in the casino, each hand is unique. It's the same in our business. Yet in the moment, all that awareness or consciousness is out the window and our primal instincts take over. It's part of our wiring. It's why we survived and excelled as a species. Works really well out on the tundra with the saber-toothed tiger. Does not work so well here. It doesn't work here, as a matter of fact. The journaling helps you learn about yourself, your repetitive behaviors. I write down my feelings. If I get stopped out and I'm ticked off about it, which is normal. I write it down. And I write down the impulse I feel right after I'm stopped, which is to jump back in. That's an impulse. That's wiring. That's like the what I was trying to capture in my snare to feed, the village or the folks back in the cave, got away. And now I'm going to chase it when maybe there's a saber-toothed tiger around the next tree and I shouldn't be chasing. I should be waiting, get back behind my tree and just follow my plan. That kind of stuff. That's what this is. We're hunting for trades. We know where they show up. We do not make up our hunting. We do not make up anything. We wait patiently. Now, I'm sitting short and I have a statistic that gives me an 85% probability. Most likely the low of the day versus yesterday. What do I do in the meantime? I just sit, or I have trade management and I manage. What the market is doing right here is called mean reversion. It is outside in trading. This is the mean. And what happens often is, now don't forget, we are below this, which is a good thing. We are below the IB. This is a good thing. We found our high. So far, that's a good thing. And we're under here. So for me, I have nothing to do. I will not get long, even though we can do this kind of behavior. And this is not a recommendation, but I may actually add to a short if everything aligns. And that's not a trade recommendation because what I do and you do, of course, are going to be different because I operate in a specific time frame. I use microstructure to get in and to monitor my trades. And I use them for triggers. But I'm overlaying everything on this and statistics. So I'm putting, it's a compilation of processes and then order flow for actual execution. So if this is the retail price, and now I'm directional, and now I'm rotational. This is a change in behavior. It doesn't mean we're going to go up. It means, unless we do, which we can, that this is the possibility, rotation. So if I think my probability of 85%, whatever that is, I think it's about 85, is this, and maybe lower, then my job, and this is not a recommendation, is to only take shorts. And I can get taken out. It can make a new high. Anything's possible, right? And so only take shorts. And if I pull outside and I have a structured trade, I would then sell to come back here and scale out to come back towards this. So I would be doing this with a runner out to here. Does that make sense? And those aren't recommendations. 55.30? What's 55.30? Yeah, there should be stops under here, but the real thing is the longs. Remember, the market goes up to go down. The market goes down to go up. So what did we do? The market went up now to go down. And what's the trend? Down. So the idea of responsive buying or short squeeze this morning, to where one never knows, is to squeeze out the weak shorts, get new longs, because the market went down yesterday. Now the market went up today. Squeeze. Market goes down to go up. And then what does the market do? It goes up to go down. Is the trend up or down, guys? Well, subject to how you kind of look at things, I would suspect it's down. So if the trend is down, and in the shorter time frame as a day trader, I take the longs. Now I want to take the shorts. And I'm not recommending anybody be short. I just happen to be short. And if I get taken out of the trade, again, the lunatic Hyde is going to have some emotional stimulus, and I'm just staying short. If I come out here, I'm going to be looking at it, because it would still be potentially, if I come out and squeeze out here, that's also a short for me. To come back here, I can come just out here and back here. So I got a low volume node here, and I've got another one way up here. So I know I can come up here. There's going to be buy stops here. I already know that. So I know where my volume is in these microstructures. And this is, you can see the LVN. So this is a distribution. These are the outside edges. This is a distribution. And what a distribution is a consolidation. That's all it is. Inside of this, I just want to isolate the volume so you can see how I do this. Looks like it's about there. So let's see what we're doing now. So this out here against this microstructure, this is the volume in here. So if I come out here, this is in alignment with this. I know there's potentially stops up here. Now we never have to get there. And I have a low volume node sitting here. This is like the outside edge, and that separates this distribution. So the volume is here. Yeah, pretty close. There's no precision in any of this, guys. All of this is like areas. Let's see what it does. So remember, this, and these are not recommendations. You know, I'm allergic to it because what I do is subject to my time frame. And I know when you guys see this kind of stuff, you want to be selling it, covering it, selling it here. And that's all possible, right? I don't, because I could end up taking a very nice morning and turning it into sludge. You know what sludge is? And instead, I need the rotations so I can get risk neutral. If I never come back, if I come out here, I know already I'll be looking at a short. That's my trade plan, and it's not a recommendation. If I blow through here and keep going, I will exit my trade and have an emotional response to it, because the hindsight thing always is, why didn't you? Do you ever have that? Why didn't you cover it here? You knew it was going to go up. Yeah, really? No, I don't. I know what it might do. And I know this is mean reversion. So this is the mean. The way mean reversion works is once you come back into the mean, then it's a consolidation. Then it's potentially out here. So I'm anticipating this because of the context. And you'll learn this in Trader Lab if you come to Trader Lab. That's why this is doing this. Now, if I understand how the market works, I'm not going to be freaked out. I might get stopped out of my runner, and that, you know, that happens, it happens. But I also know that I can come out here and squeeze out the stops that are over here, which is what's happening. I got some alert going. It's really bugging. Got to find it. Hold on. Hmm. Don't you love it when you got an alert going and you can't find it? Oh. So, looking for this. Let's see what it does. Is everybody following me? Can you see how understanding market mechanics might be an asset? Wow. You know, I'm hearing this alert going off and it's just driving me nuts. So let's watch this. Remember, we have high volume. Wait, where am I? Just make sure I got the right thing. Yeah, I'm looking up in here. This is the test of the outside edge of the consolidation. Their stop's going to be here, and I'm still going to be stalking a short unless everything goes, into the trash can. And this is all before the fact. So I'm just saying this is part of having a plan. And notice where we test. This is still important. This is important. So we're going to watch this. Hold on, guys. Hold on, guys. I got to look at some other charts here. 50. Okay. Things are scrolling off the screen, and I do look at higher time frame stuff. For me, higher time frame is a 6-tick Renko. It's nice and clean. I'm not interested in time. I don't use time-based anything in my trading because the clock is not material to the structure. So this is the thing I want to be conscious of, and this. So this and this. But I know potentially there's stops here, and I have high volume. So I have nothing to do here because I'm already sitting short. If I come to the outside and now I need range to here because this is the mean. So the way mean reversion works is outside in and then outside in. And the hard part of mean reversion, so you know, is where's the outside? Part of the joy. My least favorite condition. So there's stops sitting here, and you got to look at the swings. And we know there's going to be stops up here. So I cannot take a short here because of this. If this was down here and I had range, I would be taking a short in here because I picked the stops, I believe, over here. Assuming I did. Got to take a look. Yeah, I did. So 45.50. Well, maybe I didn't. Can't see. Yeah, this is if this had more range, I'd basically be taking a short to here because this is the rotation, you see, but I can't take it. So here's the thing about this. If you can learn how the market works, you could anticipate this. The other part of it is the market or the auction could care less about us. In other words, the behaviors are generic. What we need for trades is range to get risk neutral, which is back to here. So there's no way I can't get in here and get a scale. It doesn't work. So I don't have a trade here. What I have and what you should be thinking about is the behavior. If you understand the potential behavior, then you qualify your setups or structured trades by range and what else. Now, if we come out here, now I'm going to have the range to here. So that is in my plan. And even then, I don't step in front of it. I'm going to be looking at it in an area. And I know what's hard about mean reversion, and I always say it's mean, is where's the outside edge? See? So, but this doesn't qualify other than behavior. Does that make sense, guys? And I lost the chats. Where'd they all go? I'm getting a question about software. I can't really tell you about that, but others in the Trader Lab give you some ideas. Mean we're in a trader. If we have the indicator, what indicator is that? Kiloton. The market profile is it shows us the volume. It does not Trading from it is only to show you a broad stroke of where the distributions are. And all the volume represents is consolidation. In other words, all the volume in here. The outside edges are swing highs. So when we come out in here, we may rotate back here. That's mean reversion. The thing is, we know there's stops above this. This is kind of common. So I need to be thinking about this high volume here because we rejected it. I know that out here, we can find an outside edge and come back here. The hard part is, where's the outside edge? You see this here? Well, we reverted. Now we're going higher. So we're taking the stops out. And in my playbook, I don't want to get short until I squeeze. That's what's happening right here. So, and these are not trade recommendations. I take stops. I mean, I take them. Don't like it. What's there to like about taking a stop? It's almost like paying a bill. You have your own business, you're paying a bill. Every business has overhead and costs of production. Now, how you feel about it is different, I'm sure I don't feel great when I pay my electric bill. They should give it to me for free, but I want electricity. You know what I mean? So if I want to have the opportunity, I got to pay. Remember, I'm up here and my stops are here. Now I'm going to be looking at this. And I don't call trades because I'm just as good a stop taker as you are. So our high volume is sitting here. So if now we're above this and we're testing this consolidation. The stops are here. Notice where we are. I am not going to run in front of this thing. Now, if I get a trigger somewhere, I know this was too high in this distribution. I need to be keeping all of this in mind. I am still looking for this. And what I'm looking for and what the participants think have nothing to do with each other. I'm now up here. Now remember, when we were down here on the outside, I said mean reversion, rotation outside, potentially back here. Why would I know that? How about this? I don't know. What I know is market mechanics, how retail traders behave, where they keep their stops. And then I'm looking now to see behavior at a location. Let's see what it does. Absorption, buy stops, that's these guys. Outside edges up here, high volume is here. So we're going to look at it together. Buyers, 74 stops coming out. Buyers, hold on. This is not a trade recommendation. I'm just cruising with you guys. We're all hanging out together. We're watching. Got a lot of buyers in here. Buyers are strong right here. Now we're looking to see where the sellers, if the sellers show up, and how the buyers interact. Right now, the buyers are still playing ball. Now we might get a transition. These are not trade recommendations. You got to watch it here. Location. So this is kind of important right here. We're just going to watch it. I find it's a little better to be late when getting in a trade to be too early. For me, and this is just me, I like to have structure. So I like to see the microstructure and a trigger. Here's your volume. Here's your alignment. Not a recommendation. Just watch the behavior. See what you think. Narrate it. Just watch it. Not a recommendation. Let's just see what it does. Anything can happen. This is trading, right? You know how that goes, right? Here's your micro consolidation. Here's your micro high volume. So this is kind of the fulcrum, if you will, a pivot or whatever you want to call it. So what we're looking for now is maybe a change in behavior. And I don't suggest anybody do anything. Just watch it, screenshot it, reverse engineer it, and it's very likely to take a stop. By the way, every time I put a trade on, I think I'm going to take a stop. It protects me mentally. Because if I think I know what's going to happen, I'm really deluding myself. So what do we have? We have a seller here. We need more sellers, I think, for this thing to get going. So here's our resistance. Here was our absorption, these guys. So I know right now I got a seller here, was absorbed by these buyers, and I got sellers up here. This buyer was absorbed by the seller. So this is your kind of your sandbox right here. If this buyer gets over these guys, then north. If we can't and we can come out below here, then the sellers are winning and these buyers we're getting run over. So this is really your box, you know. So let's watch it together and see what it does. Part of the joy. Questions on this? This is not, now this is not a recommendation. This is like on the edge. This is like standing on the edge of a knife because it's going to pivot off of this. And it's a structure that can be a triggering structure. That it's all going to happen right here. It's either going to break here and we're going to now revert here, mean reversion, or we're going to squeeze further and then there's trouble in River City for those of us that are sitting short. Outside edges up here. So this is important. So let's see what it does. The thing about this is if you get short, you have a very tight stop. And this looks like it's going to fail. Let's see. Sellers are active here. The buyers took them on. Tell me this doesn't make your stomach do a few flips. Buyers are still pretty strong over here. You're going to see if this can resolve. I'm still seeing good buying. We just got to watch it. You know, it's always a battle. So it can change, as they say, on a dime. We are in the location. This is important. And it's not resolved. We got to get under this. So right now, if we can't come back above here, are you guys tracking? And again, you know, you got to follow your own plan and vet these. This is Trader Lab. Now, does this one work? No clue. By the way, guys, if you're interested, you're visiting in YouTube, there is a link in the bottom of YouTube if you're interested in the Bookmap Discord Trader Lab community. There is no cost. There's 60 PDFs of these structured trades. Now, you know, every trade is just what it is. It's maybe, right? And you can download those, plus a library of webinars, so you can kind of see this process in play over many different market configurations. This is called mean reversion. It is specific behavior, and it's really designed to come back here. And the shorts, if we don't just keep ripping, which we can do, you know, anything can happen. That's not part of the job of predicting. The structured trade, though, is to here and then out the bottom. Statistically, not, you know. So we'll see. So we have buyers here, absorption. So this is the short that I was telling you guys about. You know, As I always say, I like to get into real time, but I am very reluctant to call a trade. I mean, because it's like everything. It's your guess, if you will, is as good as mine. The difference is I'm trading based on how the market works. I don't use any indicators. So does my understanding and of course your understanding of how the market works maybe give you an edge over other traders that are just indicator based and don't understand? It's like waiting for, they're passive, they're not engaged. So we have stops, mid, VWAP, and this is mean reversion. So I can anticipate a couple of things. If I get short here, then I can get buyers at the mid because they're mechanical retail buyers, assuming we get there. We may never get there, right? So the way this works is, in the Trader Lab, we talk about a minimum 2-lot configuration. As for starters, why would you do a 2-lot? Well, first of all, you don't do anything until you do the work and you know you have a statistical edge. That helps you get control over the emotions. Because when you're in a random environment and you have nothing but your fear and your greed as what's talking in your ear, I call that hide, then you're subject to emotional stimulus. You have no plan. You're just a gambler. And that's okay. But I always say, go to casino, get the cocktails and a ticket to the buffet. And if you leave enough dollars there, maybe a ticket's to see Adele. In the trading business, what we're doing is we're waiting for structured trades and we accept the random outcome. Retail trader behavior is to buy the bid, buy the VWAP, because it's going to keep going. And they might be right. So if I get short with a minimum 2-lot configuration, starting out, I need to know what my probability is. That means statistics of getting risk neutral. Risk neutral means the distance from entry to where the trade fails. So the distance from there to there, wherever it is, down to here, you'd have no risk now. And the worst that happens is you scratch and your broker sends you a basket of cheese and crackers. Then you're going for your next target, which would be this, or subject to your plan and your development, you have a trade management process and you're just going to trail behind it and accept whatever happens. Does that make sense? This is Trader Lab, and that's what this is all about. Anticipating locations, anticipating retail trader behavior, which means they keep their stops here, wanting the stops to get taken out, waiting for the location, putting the short on, getting risk neutral, and coming here. Or just coming here to get risk neutral. And not a recommendation. Is everybody tracking? You guys getting something out of this? Jay, okay, this is still the IBF. It's the same trade. IBF is a mean reversion trade, and the fact we came out above it is good because there's stops here. So for me, I would like to see this. And what is an alignment? This. I want you to know. Sorry, the audio got lost. This is the IBF. This is the location from over here. This is the retracement. This is where the retail stops are. Thanks for playing. They all are lemmings. No offense to retail traders. I'm one of them now. And that's what I know. I see my absorption. There's my sellers interacting with these buyers, the delta. There's a sell iceberg. I'm in my location. I put my trade on and I'm going here. Mean reversion. When this happened here, I knew that was my next trade. This is what having a trade plan is about. And yes, better to have a plan. And yes, I get stopped out. Why? I pay overhead and cost of production and I protect my account. More important, not to be right, but to be here for the next trade. Now I have buyers here. What might I do? I might just come back in here and rotate. Why? Mean reversion. If I get under here, let's look at what we have. Outside edge, too high. There's the retail price in alignment right there. Remember, all this is on the map. This is how I use volume profile. The stops are out here at these outside edges. So that's why this was on the hit parade and this high volume was too high. Remember the shopping experience. I'm not paying that. I'm out of here. What's retail down here? This. What do we think of this? So I'm not paying that. Let's come back to the supermarket. Retail. Then what? Potentially out the bottom or more rotation. So for me, this is good. So I'm still sitting. And this is an add back to here. And it could just be bingo, bango with the 2 lot or a 1 lot. Figure it 2, get risk neutral. You're out of the add here. And then you're just holding your runner. All this is Trader Lab, and it's all subject to your plan. I hope you're getting something out of this, guys. And please remember, you need to verify your Discord email, and there's a verify link. Should be one in YouTube, and if there isn't, hope somebody will post it. I'm going to flash it on the screen real quick while this is fermenting. It's very important because this stream will be 1 hour long going forward. The rest of it will be live exclusively for Bookmap Discord Trader Lab participants, being able to watch the stream, being able to download the library of webinars and watch them, the statistics, everything is all available to confirmed Discord participants. Also, going forward, you're going to need to be a subscriber to Bookmap. Now, what is that? There's a free subscription. All you got to do is have a subscription. There's a free digital version if you haven't played with Bookmap or you're using TOS or Schwab version of Bookmap. If you happen to have one of those, you still need to download a free digital subscription and then just put it in the basement somewhere. But this is to have access to all the special Bookmap education that's going to be coming up and access to the resources in the Trader Lab and all. So that's coming, and I just want to let you know. But in order to attend the live stream in the Bookmap Discord Trader Lab tomorrow, after I'm done with about 60 minutes here in YouTube, you will need that. So just letting you know, a little heads up, and I hope you'll join us in the Trader Lab for the real-time narration. So how's this thing going? So for me, I try to trade these rotations. And the reason I do it is if I put this trade on here and get stopped out and it just comes out a little bit further and I get another triggering structure, because there's no precision in this thing, I'll put the trade back out again. So so I'm using what I do, and I'm not saying this is any good, is I know, and I don't put my stop right at the high. Why? It can pick stops, and then the sellers that were here absorbing, imagine this, imagine you're a seller and you sell this thing, and then it comes back up here, and there's a seller there, by the way, and the buyers push, and there's buy stops, those are the buyers, and I come out here a little bit, and the sellers that love selling it up here go, are you kidding? Another chance to get rid of some of this stuff? Here, have as much as you want, and they sell it here. Well, if I have my stop right there, I'm going to be with these guys. So I don't do that. My stop's a couple ticks away. Then once I break here, so right here is a suspect. There's the trigger. You could get in here For me, I execute quicker, but that's neither here nor there. I've just been doing it a bit longer than you. And I take stops, so it doesn't matter. We're all special that way, right? We all take our stops. Notice what we're doing. Outside to outside. So we're still in a mean reversion process here. So it's rotational trading. Now, in a rotational process, you can actually, if you determine you want to, you can actually be trading it from both sides. Or if you think south of the border is a little more dominant, then maybe only shorts. So let's come back now to the microstructure. See what you think of this. Not a recommendation. Let's just follow the yellow brick road in micro or fractal. I'm matching these up here, and the high volume is retail. Retail, I'm not paying that. I'm out of here. Now we're in here. What about this one? I don't know. And it doesn't mean it won't push through. I just know these are locations. What about this? Micro high volume, but we got this here. So let's see what it does. Questions, guys. I got about 8 minutes. And remember, there's a link in the bottom of YouTube if you want to visit Trader Lab. You just need to verify. The dinosaur person, I think I just did, right? So let's see what happens in this area. This is a consolidation. Buyers tried here, they failed. They tried here, they failed. Sellers took control here. So we can come back in this area. Let's see what it does. And it doesn't mean anything at all. I'm just showing you guys structure and how to potentially narrate. So the sellers took over here. Micro high volume is there. Please give a thumb up if you're visiting in YouTube. Visit the Trader Lab. I am not mechanical. I trade structure. They are areas of behavior. There's no precision in this thing. I know we want precision. And if you're an engineer, you like that. If you're an accountant, you need it. You're wired psychologically. Those are obstacles because there's a lot of slop. 3 buy stops. If I don't get buying above here, back here. Location, not a recommendation. How do you operate with this? Practice, 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 replays, circles, arrows, screenshots. So what I'm doing is I'm using the auction. This is what the volume profile is, the volume. I'm looking at where, and I'm thinking of it like going to a store. A consolidation is a store because it's interaction of 2 sides of participation. Inside the store is volume, in the high volume, and we rotate in a consolidation. That's what this thing is. And in the high volume in the consolidation, it's like you going to a store, and this is the retail price. Well, if they wouldn't pay it and they left the store to shop elsewhere, if we jump in the car and come back to the store, and potentially it's still too high, and the participants go, nah, that's still too high, then what might we do? We might come back here. Does that make sense? This is trading in fractals. Please give a thumb up in YouTube. Remember, this stream will be continuing starting tomorrow. It's going to go from 10:30 to 11:30 Central Time here in YouTube, and then it will continue live narration exclusively in the Bookmap Discord Trader Lab. So if you want to participate in that, and you're all welcome, just click the link in the bottom of YouTube, verify your email address, and you'll be able to hang out. There's the information. If you are a subscriber to Bookmap, you need to do the same thing. If you have a different email, you do need to verify your email. There's a link. If you come to Discord through the link in the bottom of YouTube, you'll see how to register and then to verify. All that will be available to you. And then it's up to you, if you want to take advantage, visit Trader Lab, join a community, there's no cost. And my mother always said, no cost. So let's watch the behavior. So we have this as our location. We have this as our scale. And we have no clue because this is trading. So if I know this is my location, when I see this, I can be putting my short on and my stop can be here and my scale will be ahead of this. And it's not a trade recommendation. And then I'm still looking for it to fall out the bottom at some point. And that's also not a recommendation. You guys can follow that in the Trader Lab, or, just make a note that the target of this trade at some point before the end of the day, or hopefully before, frost, is yesterday's low and lower. But this, the IB low, and that. So this is my target, 85% probability, past performance not indicative of future results, not a recommendation. And you're all welcome to visit the Trader Lab. If this is something you found interesting, and again, any one trade is unique in its own right and random, it's really just about waiting for a statistical probability. So this is, remember, where we're going. So if you got short here, you'll be scaled. That's okay for me. And now you're hanging out. If you took this trade, you'd be fine. Here was the reference for this. Back to here. It's all the same. High volume, test, break, high volume, break, test to high volume. This is auction market theory. This is how the market works. Now, what it'll do? If this is too low, we can squeeze out and find what's too high. If this is too high, we might not come back. If this is too high, we might not come back. If this is too low, we might squeeze these guys out and squeeze these guys out. All of it's possible. If I get below here and below here, then I'm going south of the border. If I can't get below here, I can squeeze. That's as deep as this is. Please give a thumb up if you're in YouTube. Use that link. Look forward to seeing you guys. Please give a thumb up down at the bottom if you got something out of this. Frank, I'm running out of time here, Frank. I can't answer that question. I think others in Trader Lab might be able to help you. Yes, Slaughterazi, it is me. I'm out of time. Please give a thumb up in YouTube. Remember, this stream is available exclusively to Bookmap Discord Trader Lab participants to review, screenshot, reverse engineer, work on your plans. We're never done in this business. We're all trying to get better. I've been doing this going on 45 years. I watch this stream every day. I look at things. I say, could I have done better? If I can shave one tick off over thousands of trades, and that's why I use an order flow tool like Bookmap, I can reduce my risk a tick. I can get an extra tick profit. What is that worth? It's huge. That's why I use the tools I use. And like everybody else, the outcome of any interaction with the other participants is random. Thanks again, guys, for visiting Trader Lab. Be sure to confirm and verify your Discord subscriptions. Download the free digital version of Bookmap. It's available. There's a link in the bottom of YouTube. Get that thing. There's no cost. There's no cost to visit Trader Lab. Become part of a great community and take advantage of the library of webinars and all the resources. But the key here is community. This is a group of like-minded traders that have come together to leverage their collective experience. We've all have similar experiences and also diverse ones. The more we come together, the more we share our experiences, the more you're going to find that your experiences is not unique. It's very common. It's what you do about it and what you can extract from your experience. Are you caught in a loop of Trader Groundhog Day, getting excited, seeing something that works, tweaking it, tuning it, and then have it break down? That's Trader Groundhog Day. Anyone in this business has experienced that. And if you're having that experience, come to Trader Lab. because you're with kindred souls. Thanks again, guys. Please give that thumb up. Thanks for visiting the Trader Lab. And remember, the objective of this current short, which is not, of course, a recommendation, is the yesterday's low of day. And, of course, the trade should be managed per your plan, not mine. Take care, guys. See you tomorrow. And be sure to register so you can watch the stream when it continues exclusively in the Trader Lab.